change. EV stocks dominate the headlines for years. But there's another unique way to expose your portfolio to the EV market. William McDonough is with us, CEO and lead portfolio manager at EFG Advisors, joining me now. And a new ETF that you launched, CHRG, CHRG, right? So is this some commodities, or how does this relate to EVs?
Thank you. Yeah, our ETF that we launched right there on the floor of the New York Stock Exchange, CHRG, what we have is lithium, nickel, copper, and cobalt futures, giving people the opportunity to participate in the upside of the rising demand for all green energy sources and uses in the future without any of the execution risk or capital markets risk or geological, geographical, geopolitical risks that the EV companies have, the mining companies have, and the traditional equities have that have been the way that people have sought exposure to this whole carbon neutral future.
So as we look at this, I mean, is this a good way to do this? To look, instead of just saying, hey, I love Tesla or NIO or XPeng or whatever else, to have exposure to EV companies? Is this having the materials? Is this a good way, and why?
Yeah. You know, you just rattled off a few names. Tesla, of course, everyone loves, including myself, just because it's such an innovative, great business. But there's 1,000 other companies that are trying to make it. And if you look back 100 years ago, there've been over 3,000 car companies come and go, and only 3 of those remain in the combustion engine business. It's going to be the same in the EV marketplace. They're going to have hard time accessing capital markets. They're going to have hard time differentiating themselves, since none of them have any proprietary performance. The only thing different about their businesses is the shape of their headlamps and the badge on the hood. And so for me, I do believe that we are going green. I do believe that we'll have more EVs tomorrow than we have today. And so I'd rather just participate in the rising demand for the core commodities necessary for all EV adoption, all battery adoption, all solar, wind adoption, than having to make a bet on the execution capacity of a startup that operates in a traditionally harder to navigate market like China, or that sources its materials from a hard to navigate place like Africa.
So do you have any EV companies in the CHRG ETF? Is it more about charging companies and materials?
No, we actually have made the decision to have no public equities in our portfolio at all. There was an interesting rule maturation in the last several years that allows 40 Act products to hold futures contracts. So I used to work at Goldman Sachs, and I called my old desk at Goldman trying to go long lithium several years ago, and they told me I needed 10 million in cash on deposit to trade a futures contract, which was crazy to me. But if you wrap that in a 40 Act wrapper like an ETF, retail investors can buy exposure to the futures of commodities like lithium, nickel, copper, and cobalt through our fund CHRG at $20 at a slug, whatever our latest stock price might be.
So when I think about, right, we have Blink on, that's an electric vehicle charging company. I know you know it. Tesla is now making superchargers, so I don't know if they fall into a different category for you. And I know there are others, when we think about EV vehicles, how about ChargePoint? Would you have any of those in there?
No, but what we do have is the copper that every single one of those companies needs to succeed. Every electric vehicle requires 1 mile of copper wire in the car. Every charging company is just a company that's installing copper wire between their charging plug and the grid. And so all of that demand for new charging infrastructure is demand for copper, which, as Goldman Sachs calls it, is the new gold.
What are your thoughts on the fact that so many of these materials come from abroad when you think about rare earth materials and, just your big picture, because EVs are great, but just trying to get the EVs out and off and onto the streets, and then trying to get the electric grid set up for these EVs just seems like there are a lot of hurdles. I mean, what's on your mind in the big picture? I mean, even, for example, in the EU, they're not going to offer, maybe not offer the same subsidies for Chinese-made vehicles. There's so much going on. It's like on the one hand, we'll say, oh, EVs for everybody, it's the best way to go. And then you'll hear there's not this or there's not that, and it seems too slow. I mean, give us a big picture.
Yeah, the big picture is even scarier. We did a webinar recently for many in the Schwab network that was called the 3 Geos of green metal investing. And I referenced it earlier. Geological, we all appreciate digging it out of the ground. Geographical is that the largest of these come from Africa, Latin America. But even scarier is geopolitically, over 60% of copper, lithium, nickel, and cobalt is processed in China. And so all this is a story about being careful about our relations with China and their ability to just shut off the spigot. We'll ask Eastern Europe how it worked out to be dependent on Saudi Arabia and Russia for the entirety of their energy. If our green energy future depends on China exclusively for those metals and our capacities to innovate and mature any carbon neutral goals, well, then that's a troubling thing. And so that's another reason why we're so happy to be long these core commodities, because the geopolitical risk with China at any given moment could suck literally a majority of the materials off the market, and you can understand what that would do to price activity.
Right, understood. Wasn't there a recent discovery in California? Did you hear about that today? What was that?
Yeah, it's big news this week. It's in actually in northern Nevada, and they found what they believe to be the largest lithium supply in the world in a volcano. And so the market's excited about that for sure, but it's also worth noting it's in a volcano. So the soonest that we're going to see any of the volume hit the market in finished battery capacity from that geological find would be in the mid-2030s. So this is a great news to wean ourselves off Chinese dependence, but it is not going to affect us for at least 10 years, probably closer to 15. What's going to happen in the next 0 to 10 years is why we launched CHRG and why we think that this is the story of the decade, is the rising demand for EV, solar, and wind, and the testy supply coming from geographies like China, Democratic Republic of Congo, and Chile. Those are not democracies, any of them. And so we're depending on unfriendly nations for these supplies, and we're making massive commitments to going in that direction without securing it. And that's why you see headlines also where Tesla is acquiring their own lithium reserves, and the car companies are going out into the M&A market to acquire their own reserves of these metals to assure their supply. The biggest risk to any of the EV companies' future is their ability to deliver these cars at affordable prices. And the only cost that they can't manipulate with policy, tax incentives, or labor unions is the cost of the commodity that it takes to build those cars and those batteries.
Yeah. William McDonough, thank you so much, EMG Advisors. I knew you'd have the answer about the lithium. Thank you for clearing that up, too. Really big, exciting news here in the States, too. Thank you so much.